Welcome, everyone. Thank you for joining today's webinar on short-term rentals and boutique hotels, where we look at how the hospitality sector presents unique opportunities for retirement growth. It is top of the hour, and I do want to be respectful of your time, so let's get started. I'm excited to welcome back speaker Rich Munroe of Diamond Edge Properties, an Atlanta-based real estate investment firm that specializes in short-term rentals and boutique hotel investing. Thank you, Rich, for speaking and knowledge sharing with the audience today.
Thanks so much for having me, Reneika. Looking forward to it.
You're certainly welcome. Before I turn it over, I do want to just kind of give you a general overview of what self-direction is, how it works, and of course, the steps to get started with us here at Advanta. If you have questions, feel free to type those in the question box. We'll answer as we go, and also any remaining questions, we'll allocate some time at the end. I'm Reneika Lightbourne with Advanta IRA. I'm one of the business development specialists with Advanta since 2019, but I'm also an Advanta IRA client prior to joining staff. So self-direction is something that I personally and professionally advocate very strongly. After today's webinar, if you want to kind of talk through your scenario or if you have additional questions, you're always welcome to give me a call or send me an email or go to our website to book a consultation with myself or my team. Just a quick disclaimer before we get started. Just know that at Advanta, we don't give any tax, legal, or investment advice. All of the information that's presented today is just for educational purposes. As always, we encourage you to consult with your professional team, like your CPA, financial advisors, and so forth, before making any investment decisions. Just really quickly, takeaways in terms of if this is a new concept for you. Just know that any IRA or former employer plan qualifies to be self-directed. So that's like an old 401k or 403b and so forth. 2, you get to choose the investment that works best for you. Today, we're focusing on real estate related assets like short-term rentals and hotels, boutique hotels. And then of course, just knowing that all of the income generated from that investment flows back into your retirement account, tax-free or tax-deferred. Just a little history about Advanta and who we are. We are the leading self-directed IRA administrator in the business for 22 plus years now. While our team doesn't give any advice, tax, legal, investment advice, it is comprised of attorneys and also certified IRA service professionals. Our headquarters is located in Clearwater, Florida, so the general Tampa Bay area. Advanta has an office in Atlanta, which is where I'm based, but we do work with clients nationwide as we now have over $3 billion under administration. Our focus here at Advanta is provide our clients that concierge style service to where you have a dedicated account manager who's with you for the life of your account with us. And then of course, we have experts and practitioners such as Rich come in and knowledge share with you related to different investment opportunities that you can do within a self-directed retirement account. We do have weekly webinars, so we encourage you to continue to go to our website, register to attend. If you have an interest in a specific topic, you're welcome to let us know. We also have Pitch, Promote, Prosper, which is a virtual online networking event. We have one this Friday that I'm co-hosting with my colleague. My colleague Alex Perney actually hosts our podcast, so it's more informal, but great content, anything and everything related to self-direction, along with our blogs. A blog with great articles. So exactly what is a self-directed IRA? Just very simply, it means that you as the account owner, you have complete control over your retirement funds, complete control over the investment decisions. You get to diversify outside of traditional stocks and bonds. Most of our clients have real estate holdings in their IRA, but you can certainly use IRA funds to invest in oil and gas, precious metals, private equity, do private lending, and so forth. When it comes to real estate, it means many things to many different investors. Today, we're focusing specifically on short-term rentals and boutique style hotels, but you can invest in the likes of a fix and flip project, or you can do mobile home parks, tax liens, tax deeds, multifamily units. So real estate, again, it's pretty diverse. Why do people choose to self-direct? You can look to self-direct for many different reasons. One, it's a new source of capital for you. So if you have an existing IRA or an old employer plan, instead of taking out that bank loan or tapping into your emergency fund, you can elect to move a portion of your qualified retirement funds to make the next investment. The ups and downs in the stock market, we have no control over that. Some days is up, some days is down. We know with real estate as a tangible asset, it always retains value. So you get to really diversify into those type of tangible physical assets to help build your retirement account. And then, of course, the tax benefits. Having rents and profits and dividends flow back into your retirement account, tax-free or tax-deferred, based on the type of account that you have. If you were to go to the IRS website, you won't see the term self-direction or self-directed. It just means, again, that you get to decide what you want to invest in. The account types is the ones that you're already familiar with. So like the traditional and Roth IRAs, traditional being tax-deferred, you get a tax break up front. You grow your account over time. You pay taxes when you take a distribution during retirement years. With a Roth IRA, you're electing to pay taxes up front as long as you've held that Roth account for at least 5 years and you're 59 and a half, which is the retirement age per the IRS, your distributions will be tax-free. If you are self-employed or have a small business or a side business, you have the ability to also invest and save for retirement using SEP, Simples, and solo 401ks. Solo 401ks is very attractive for real estate professionals. You have greater flexibility. Again, if you want to know more about those accounts, feel free to reach out to me. Some smaller or lesser dollar accounts that's just as important that you can self-direct is, an ESA account, educational savings accounts for your kids, grandkids, nieces and nephews, and so forth. And then a health savings account. As long as you've had a health savings account, a high deductible health savings account, then you can certainly look to self-direct your HSA. So check with your plan provider to make sure that you have a high deductible medical plan. The key thing is, any former employer plan, you can move it. If it's a current employer plan, you may run into some restrictions if you're not yet 59 and a half. You can certainly check with your plan provider to see if they'll make an exception, but any former employer plan or existing IRAs, you can move those funds over. In terms of funding, there's a couple options for you. You can transfer funds from an existing IRA, meaning you can move as much or as little as you need to. There's no tax liabilities for you to do that. In that scenario, Advanta would submit that transfer request over to the other custodian on your behalf. You just need to make sure whatever amount that you decide you want to move, it's liquid, it's in cash or money market. So if it's currently tied up in stocks or bonds, tell your other custodian to sell so it's settled in cash. If you have an old employer plan, like an old 401k, 403b, or TSP type plan, you do have to initiate that request. You're not taking a personal distribution. The plan provider or plan administrator is just simply sending it from one retirement account over to the next. So again, we'll walk you through that process. And then of course, making an annual cash contribution. For 2025, the traditional Roth IRA amounts remain the same as it was in 2024. So if you're under the age of 50, you can put in $7,000 a year as long as you have earned income. If you're over the age of 50, you can put in up to $8,000. SEP, Simple, Solo 401ks, again, those are the employer-sponsored plan where you have higher contribution amounts. Specifically for Solo 401ks, essentially you get to contribute as an employee, but also match as an employer. And if you're under the age of 50, you can put in up to $70,000 for that account for Solo 401ks. If you're between the ages of 50 and older, between 50 and 59 or 64 and older, then you can put up to possibly $77,500. But starting in 2025, between the ages of 60 and 63, you have an additional catch-up to where you can possibly contribute up to $81,250. So again, a high dollar amount that you can possibly put into your solo 401k. ESA, you can put in $2,000 per year per child. With an HSA account, again, having that high deductible plan for an individual, you can put in $4,300. For a family plan, you can put in $8,500. Also with an HSA, as long as you're 55 and older, you can put in an additional $1,000. So again, multiple accounts, you can put lots of money into your retirement accounts to save and invest. In terms of getting started with us, the process is really streamlined for you in 3 simple steps. First and foremost, filling out our application to get your account open. For the IRA accounts, you can go directly to our website, advantaira.com, fill out the paperwork. If you need help or guidance, one of my colleagues or myself, we can jump on the call and walk you through that paperwork. Step 2 is funding. So again, you have a combination of transferring funds from an existing IRA or doing a direct rollover from an old employer plan, and or making an annual cash contribution, again, as long as you've earned income. And then finally, step 3, making that investment. What is it that you're interested in? Is it something that Rich says on the call today, or is it private assets like private lending or private company. Essentially, you get to really diversify using a self-directed account. And with that, I'll go ahead and turn it over to Rich. Rich, let me just make you the presenter, so just bear with me one moment.
All right, awesome. So thanks so much, Reneika, for inviting me back. I'm super excited today to kind of jump in. I'd love to make this super interactive and productive for your members. And so rather than doing a presentation and everybody sitting there, I'd love to have folks be able to ask questions along the way. And then if you could moderate those questions for me, again, I want this to be super informative for folks and a lot more interactive, if that's okay.
Yes, absolutely. Sounds good.
All right, awesome. And so I guess on the webinar feature, there's a way for them to put in a question.
Yes, I have the question box available. They can just go ahead and just type in, as it comes up, and I'll interject and just ask away.
Okay, great, great. So I want to accomplish a couple things today. First thing, introduction to me and my experience and my background with short-term rentals and real estate in general. I want to do a little bit of a brief presentation on what's currently going on in the market for short-term rentals, so everybody can kind of see what's been going on in the last couple of years and what we're anticipating in the years to come. And then, like we've positioned, the main topic today is boutique hotels. So we're going to kind of dig into what makes a hotel a boutique hotel and why are those potentially good opportunities. And then we have a couple of investments that we're currently looking at that are available, and we're going to kind of give an overview of those opportunities as well. So with that, let me kind of jump in. And so, I actually started in real estate about 20 years ago, and ironically, I used my Roth IRA self-directed to kind of get started with tax lien investing. And so I kind of proved out that model with my IRA funds and bought properties in Georgia and kind of tested it out with about 5 or 6 different properties, start to finish, and then built a larger credit facility to kind of do it at scale. And so we bought about 350 properties, mostly in Georgia and in Maryland, through tax lien investing, and kind of saw the worst case scenario of properties needing full gut rehabs, sold most of those properties to other investors. And then we also started a fix and flip business, and we were doing about 7 to 8 fix and flips a year. And like most investors, started looking at, how do we develop consistent monthly cash flow? Fix and flips are, great and very lucrative, but it's very inconsistent with the cash flow and a lot of financial stress involved there. So I started developing a long-term rental portfolio and very quickly recognized getting burnt out from having to evict people right before the holidays because they're not paying the rent, having to rehab the property again, and really looking at the numbers not making a whole lot of sense. So it's been about 10 years ago now that I decided to shift our business to focus specifically on short-term rentals. For me, it was kind of a light bulb moment. When you can generate with the same asset 2 to 3 times the revenue that you can as a long-term rental, the properties stay in much better shape. And so I kind of haven't looked back since then. And so we developed and grew a portfolio up to about 75 properties, mostly in Georgia, throughout the suburbs and in town. And then we also expanded down into the Florida, Tampa Bay market just before COVID. We had about 20 properties down in Florida that were all single family homes doing short-term rentals. And so I'll give you a little bit of background on what those opportunities look like, and then we can kind of get into the hotels. So in 2020, I also became an Airbnb ambassador and a community leader, a lot more involved with helping other hosts get onto the platform and grow scalable businesses. And, the regulatory environment is very strict with Airbnbs and short-term rentals in a lot of major cities, and Atlanta is no exception to that. And so in 2022, I formed a nonprofit called Atlanta Metro Short-Term Rental Alliance, basically to combat the very non-investor friendly ordinance that was put in place that required you to be a resident of Atlanta and only to be able to do your primary resident plus 1 additional property. And so at that time, I had about 30 properties that we were doing short-term rentals with. So I couldn't even legally apply for the license. I didn't live in Atlanta. I live in the suburbs of Atlanta. And so we've actually been negotiating with the city of Atlanta right now to redo the ordinance. There's some anticipation prior to the World Cup coming that they would like to get that resolved. Even though they've voted in that non-investor friendly rule, they currently are not enforcing it. And so we're in the process right now of negotiating with them to hopefully get that redone so that we don't have as restrictive as what they've currently set up. 2023 also formed BNB Investing Group, and so this is a group of mastermind group where we have other investors, real estate investors, that we talk about best practices, and we talk about different things, service providers, a lot of technology in the space that helps you grow a scalable short-term rental business. I also started a podcast that you guys are welcome to look up. It's under BNB Investing. And so I interview different short-term rental investors that have different niches, whether it's ADUs or tiny homes or co-living space, boutique hotels, obviously, container homes, luxury lake houses. And then there's folks that are focused specifically on management for short-term rentals. Management is a good opportunity for investors to kind of make 25% of the rental income as a manager. And so that's another part of our business as well. So feel free to look that up. We're on YouTube, Spotify, or Apple Play for BNB Investing Podcasts. It's a good way to kind of see what a lot of different investors are doing out in the marketplace. There's a lot of interesting investments opportunities like Reneika talked about. You don't necessarily have to be locked into one particular type of investment with real estate. You've got, tiny homes, ADUs that are quite popular in the short-term rental world. These are still generating anywhere from $250 to $300 a night in revenue, even though it's a very small, less than 500 or 600 square foot footprint. There's also modular type homes, container homes that are also doing very well, that are good investments. And then there's kind of higher end luxury tree houses. And these are all folks that I've done interviews with on my podcast to kind of learn about all the different options that are in the vacation rental market. You can do cabins, there's teepee huts, all kinds of different opportunities, of course, luxury, high end as well. Now I'm just going to briefly cover just kind of what I've experienced over the last 10 years. I started out with kind of multifamily buildings here in Midtown Atlanta, all 1 and 2 bedrooms. And so with the short-term rental model, this is a quadplex that we did the entire building as short-term rentals. This is a 22 unit building that we did all short-term rentals. We kind of converted the long-term rental over to short-term. So even multifamily, there's a good opportunity to make this be successful. This was a 27 unit building that we ran with all 1 bedrooms. Most of the units were about 680 square feet. Some of them were 800 square feet. Common areas, Midtown Atlanta, walkable to all the restaurants. And so this building performed quite well. And, we basically, to put in perspective, these are 1 bedroom units as a long-term rental that we're going for $1,400 to $1,500 a month as a long-term rent. And in most cases, we're generating, 2 to 3x that. So $3,800, for example, $3,300, just depending on the time of year as well. There is some seasonality into it. So wanted to also kind of give you some brief examples. This is don't have to be in the middle of, all the hot areas and great walkable places. This is kind of a house out in the suburbs. This is a house in Fairburn in southern Georgia. It's about 40 minutes south of Atlanta, or 20 minutes south of Atlanta Airport. It's a 4-bedroom house, 3-bath, nothing special about it. As a long-term rental, if you own this property, you can get about $2,200 a month in rental revenue. Make no mistake about it, this is a hospitality business. And so in order to be successful, you've really got to have your finger on the pulse of hospitality. And so everything that we do operationally is focused around the guest experience and a good review. And so as long as you have that as a backbone of your short-term rental business, that's going to allow you to kind of be consistent with your occupancy levels and your nightly rates, as well as to be able to kind of start commanding a premium in your revenue, right? So that property, this is kind of the performance. We started that listing last February. And again, as a $2,200 a month long-term rental, the short-term rental revenue obviously has ebbs and flows. So just wanted to kind of point that out. It's not a consistent monthly, every month you're going to get X, because you have changes in the market, changes in occupancy. The other great thing about this obviously is, compared to a long-term rental, I'm not chasing people down for the rent. Before they even enter the property, they're paying the reservation. And so like in this example, in July of 2024, we had someone stay there for about 35 days. And so that money comes in right away in that month. And that's why it's kind of short in August. But as you can see, this is a much better situation from generating revenue compared to a long-term rental on that same exact property. Here's another example. Yep.
I have a couple questions, if you don't mind.
Sure.
One question is, how did you scale so many to so many units? Did you purchase large portfolios? How did you find that many deals? What was your capital stack, and how did you finance everything?
Yeah,
so that's
no, great.
Multiple questions.
Yeah, great question. So, we've basically have a combination. My portfolio of 75 properties that we grew to through COVID was a combination of properties that we acquired, distressed, rehab them, single family mostly, fix them up for the purpose of doing short-term rentals. The other strategy that I mentioned earlier as well is we managed quite a bit of the portfolio for other investors. And so it allowed us to kind of be more efficient, lower economies of scale, but add additional cash flow to the business of 25% of the rental revenue for those properties that we're managing for other investors. We also, on some of our multifamily opportunities, partnered with other multifamily building owners and basically did more of a revenue share arrangement where we did the entire operation and created it as a revenue share versus us having to go buy the property.
Okay, next question is, how important is it for amenities, and what property features that you typically provide your guests just to ensure guest satisfaction and repeat bookings?
Yeah, so amenities are definitely, an advantage. This is another property in Lawrenceville, Georgia, out in the suburbs. Swimming pool, hot tub, movie room, quite a bit of additional amenities. So hot tubs in particular are definitely something to invest in that you get, way exceeds your return on investment. And then you obviously want to be able to be, I mentioned the fact that this is a hospitality business. So you really got to have your team together for not only just making sure that the property is maintained for when guests show up, but anything that happens while the guest is staying there. So we've got full 24/7 guest communications. We've got handymen that are on call that will show up in the event something goes wrong. And it's not like a long-term rental where if you get a call on a Saturday that the AC is not working, it's not acceptable to say that we're going to be there. The HVAC guy can't come till Tuesday. They might be checking out on Monday. Right? The average stay of these guests are typically 3 to 5 days. And so those are just some examples of that. And you'll see very quickly that as you maintain and focus your business around your 5-star reviews, having a superhost status, you're going to be able to start commanding a premium. So this is for that property in Lawrenceville with a swimming pool in the backyard. The average market rate for short-term rental nightly rates in that neighborhood for a 4-bedroom is $350 a night. However, we were able to gradually increase the nightly revenue on this property to about $800 as an average per night because of the guest experience, because of focusing on hospitality and making sure every time somebody's booking a property, they're looking at those reviews. And so that's really got to be the backbone of any short-term rental business to be successful.
Thank you.
Yep. This is another example of a property that we did a full gut rehab on. This is a property on Lake Lanier. It was originally built in 1960. It's got a dock. We added a hot tub. These are just some before and after pictures, before the renovation and after. And the reason why I want to spend a little bit of time here on single family is because I want to show the difference in the opportunity with boutique hotels. And so, we did this is about an $800,000 purchase, a $200,000 rehab, and we were able to command the average monthly rental revenue at around $20,000 to $25,000 a month in short-term rental revenue for this house. Again, focusing on the 5-star reviews, as I've mentioned before, right? And so that's all good and well for this as an asset in your portfolio or as an asset that you're investing in. However, what I've recognized, having done this multiple times, is now that you've done that great rehab and remodel, you're kind of limited on your value of that property to what the other properties are appraising for on the lake, right, that are similar to your property. So 3-4 years when you're ready to exit, you can probably be able to sell that property based on what the market prices are selling for. So your appreciation is probably going to be very limited in that 3 to 5 year window. We're going to look at the boutique hotel opportunity where your valuation on your property is based on your net operating income or your revenue or your cap rate, right? So you have full control over being able to increase the valuation, typically 2 to 3 times in that same 3 to 5 year window. So if I've got $10 million to put to work, it's going to be a lot more productive for me to be able to, and more efficient for me to be able to invest in multiple hotel opportunities than it would be a multiple single family houses. So I just wanted to kind of point that out so you can kind of see that difference.
Okay, a couple questions just popped in relating to IRAs, and then of course another for you. Just bear with me. It says, do active business short-term rentals and a self-directed IRA retirement plan conflict with prohibited transactions? So you do have the ability, there's a couple ways you can structure deals in your IRA. You can passively invest by just, connecting with an expert like Rich and just lending, or however the deal is structured. Or yes, your IRA can actually purchase a short-term rental within the retirement account. Just be mindful in terms of, to your point, the IRS rules of prohibited transaction, meaning you're not allowed to stay in that property, even if it's vacant for a week. So if your IRA owns a short-term rental on a beach and it's available, you're not allowed to stay in that property. You're not allowed to do any of the sweat equity. You can certainly hire a property manager that handles managing the actual property in terms of doing the cleaning and so forth, but your IRA can purchase a rental property or a short-term rental property. You're just not allowed to, you or any disqualified person is not allowed to stay in that. Next question is, does the full value of the purchase has to be in the IRA account, or down payment is enough? So again, there's multiple ways that you can structure a partner. You can partner with other investors, including your IRA, to purchase. However, if the IRA doesn't have all of the money to purchase the property outright, you can use loan or leverage, but just be mindful the loan type itself has to be a non-recourse loan. That just means that you personally you're not guaranteeing the loan. It's the actual IRA that's taking out the loan, but there's some things to be mindful of. I'm happy to do a deeper dive as it relates to non-recourse loans. Question is for you, Rich. Are you working with brokers to find these properties? How are you finding these deals?
Yeah, so definitely I do have a network of real estate agents and what they call wholesalers, where obviously my preference is to acquire properties off market where it's not on the MLS, and that's typically most of our deals are done that way. Like this lake house was done where it was an off market deal that was brought to us. And so we have multiple sources of off market properties. We also have an in-house team that's doing due diligence and actual prospecting for those types of properties.
Okay, sounds good. Next question that just popped in: can we manage a property without property manager? You don't necessarily have to have a property manager, but you can't be the one that's doing any of the sweat equity. So you can't be the one that's cleaning the rental property and so forth. So you want to be hands off. You get to decide, how much the rate you charge, or what needs to get done in terms of renovation, but you can't be the one that's physically doing the labor. So to kind of keep it easy or streamlined, you may want to consider a property manager, but it's not 100% necessary. You can go ahead, Rich.
So just a clarification on that, Reneika. So if I have the ability to do self-managing, is what you're saying if it's done through my IRA, I'm not able to self-manage as an option?
No, you can be the property manager. The only thing, it becomes a gray area if you're the one that's cleaning the rental property, or you're the one that's painting the wall. You're not allowed to do that per the IRS. No sweat equity. So
gotcha.
And then of course you can't, even if, even if you're not paying yourself, you still can't be the one that's doing any of the physical labor relating to maintaining that property.
Yeah, no, so I actually do coaching and consulting, and we help investors learn how to self-manage and do it at scale. And we actually, on purpose, want to outsource everything, in terms of not being the ones to do it, right? So usually when you get started in the beginning, even though the property might be 20 minutes away, you want to add multiple units, and you want to have the flexibility to do this remotely, which a lot of us do. You want to be able to have, everything like Reneika was talking about, cleaning, maintenance, and everything totally outsourced to other vendors and contractors. And you are able to still self-manage remotely by doing revenue management. There's different tools that we use to basically put the listing in multiple platforms, not only just on Airbnb, but on VRBO, Booking.com. We're also a Marriott Homes and Villas approved vendor, so you essentially want to maximize exposure for that property. And so that's another option, and it saves you the 25%, obviously, to pay another property manager to manage it for you.
Thank you.
So I'd like to dig into real quick, I know our last presentation, we focused a lot of time and energy on what's going on in the market. I did want to touch briefly and give everyone kind of a quick update on what we're currently seeing, what we've seen in the last couple of years, right? So, obviously there's been since COVID, and you can tell in 2022, we had, higher occupancy levels, higher nightly rates, and, experienced kind of an inflation because of people wanting to do staycations. A lot of people driving to destinations to stay wasn't necessarily where they're going, but basically having the ability to go to different locations. And now in 2023, we experienced a downtick in the not only in the ADRs and the occupancy levels, but also in the available listings. So there's been an increase in supply, a slight decrease in demand. And so a lot of the folks that have been doing short-term rentals over the last couple of years have started to see a decline in activity. Now, this goes back to what I talked about earlier and the importance of hospitality. A lot of people prior to the pandemic, you could throw up a listing and be very successful in this business. However, because of the increased supply and the slight decrease in demand, it's a very competitive environment, and folks are making booking decisions based on the 5-star reviews and superhost status. And so what we've seen happen in 2024 is we've started to see kind of a decrease slightly in supply based on some of those hosts that just weren't doing it correctly, weren't running it like a business like we do. And so that's why the market has started to basically make a turn for, in terms of the nightly rates and the occupancy levels. I did want to also show a comparison to this same data. Some of us are based here in Atlanta. A lot of our properties are in the Atlanta market. And here is the Atlanta stats for the same time period. And if you notice, Atlanta got hit a little bit harder on a decrease in the nightly rates, a decrease in the demand and occupancy levels, because of everything I've talked about, because it also had an increase in supply. But I think with the uncertainty with the regulations that I touched on, this has also contributed to Atlanta having a bigger hit on lower nightly rates and lower occupancy and revenue potentials. Now, going forward, I think 2025, we're looking at, definitely making a turn here because of the marketplaces that we've got, more experienced hosts that are kind of still there, and a lot of the bad hosts are kind of dropping out. And so I think we're looking for, not only in Atlanta, but also in the US in general, we're looking at increases in those levels going forward. Any questions on kind of the performance in the short-term rental market?
One question that just what popped up was, is there a website that you use for off-market deals in addition to using realtors? So they just want to know what resources that you have that you can share.
Yeah, so I do on the commercial side for hotels. We are currently using Crexi. It's similar to some of the larger, listing services for commercial, but it also gives you the ability to kind of search for off-market deals as well. There are multiple different platforms that provide this for single family if you're trying to look into single family, but more than anything, we get most of our deals through relationships. And so it's really about, cultivating a network of folks that are focused on going and searching for these deals, and basically on a wholesale basis. And so they'll get a wholesale fee instead of a real estate fee. And so those are really the better opportunities, is kind of over time, depending on your target market, kind of focusing in on who are doing the most deals in that area that are off market, that you can kind of develop relationships with, get on their list. And every day and every week, we get multiple opportunities that are coming to us that are off market through those relationships. So that would be the recommendation. Obviously, commercial brokers, real estate brokers as well, because you typically have what's called pocket listings, where before they list a property, they might be able to present that as an opportunity to you. Also, if it's a problem listing where they're having a hard time selling it, they may come to you after that as well, and be more opportunistic on negotiating and price.
Okay, one question came up relating to like the outlook in terms of how do you accurately project potential returns and assess the profitability of a property or your specific properties? Right,
that's a great question. And so this data here is based on a third-party company called AirDNA. They're the largest short-term rental historical data collection company that's been around. They've got 6 years plus of historical information on the short-term rental revenue. I've had on my podcast, I typically have their top economists that talk to what they're seeing in the market. And so I'm relying on, more a focused effort and expertise on being able to analyze this historical data and come up with forecasting. Now, on a one-off basis, when we do our analysis, AirDNA is one of the tools that we use for estimating projected revenue, but we do have multiple other platforms that we do as well. I think if you're familiar with, doing a typical appraisal, it's very similar to that, right? And so when I do my analysis for confirming what the future short-term rental revenue is going to be, I'm looking at comparable short-term rentals, same size property in that area that's already up and running. What's their current performance look like? How do those properties compare to the one I'm about to set up? How is their staging? How are their reviews? What are the folks reviewing about? Are they complaining about the neighborhood or the area? Or are there some concerns there? So you really got to do a deep dive, no matter what platform you use, to kind of refine and do a comp set that's very similar to the prospect property to be able to come up with an accurate forecast.
It sounds good. Thank you.
All right, so let's dig into what we're all here for. What makes a boutique hotel different, right? How do you define a boutique hotel? Boutique hotels are typically going to be on the smaller side, 50 rooms or less, in some cases 100 rooms or less. And the boutique hotel is really looking for one-of-a-kind experiences for your guest. They typically want to have memorable interior design, features that are very unique and that are not kind of off the shelf. You want to be able to have unique neighborhood locations close to amenities or close to other types of touristy opportunities. Typically, boutique hotels want to also include restaurants and dining, and definitely creating other experiences like yoga, health and fitness, spas, things of that nature. Also kind of atypical amenities, whether it's riding on a boat, riding on a horse, going hiking. And so typically, when we look at opportunities in the market, we're looking for properties that lend themselves to having the ability to basically enhance some of those amenity features. Typically, we want to focus a lot of our time on common areas that allow us to put in fire pit areas, places where folks can gather and create those memories with family and friends and corporate events. And so we kind of spend a lot of time when we do our analysis up front on what the makeup of the property is. It's very rare that we'd find a good opportunity that's basically a building and a parking lot with not a whole lot of other options to expand upon and improve upon. And so, these are just some examples. Obviously, there's going to be a little bit more, quite a bit more put into the rehab process, a little bit more creative thought process in what's getting done for the rehab and for the remodel. Some of these go, in more of a theme, depending on where the properties are located, and you can kind of, again, create that experience that's going to be unique and different, that those travelers are not going to be able to find at other choices. So why boutique hotels? So, I talked about some of the opportunities, not only in single family, but also in multifamily, right? So I've had the option as well to invest heavily in multifamily opportunities. They're basically experiencing the same oversaturation I talked about with the increased supply, limited income potential. And then we've talked about the Airbnb regulations tightening. And so we've seen evidence in Atlanta where it's had a direct impact on potential revenue. So even in multifamily, part of the regulations that typically gets put in place puts a limit on or a cap on how many units in your building you can do Airbnb or short-term rentals, right? So if you've got a 30-unit building, but the regulations only allow you to do 10% of your rooms, then it's restricting your ability to do that, right? Obviously, with hotels, there's typically a license based on zoning that's a requirement. And like I've talked about before, your revenue is going to be not limited, and you're going to be able to command a value in that property based on the revenue that you're generating. Another big thing here is there's a lot of baby boomers that are set to retire. A lot of these independent hotels are typically owned by baby boomers that are basically ready to kind of exit and are kind of worn out. They are also typically not up to date on technology and some of the things that we can employ right away, like self-check-in to decrease your overhead expenses. There's also seller finance opportunities that are created here. A lot of these older properties that were acquired 20, 30, 40 years ago were typically acquired through seller financing. So when someone sells these properties, they're typically going to be accustomed to providing that as an option. So obviously, in today's high interest environment, that creates further opportunities for us to get much lower cost of funds on the bulk of the purchase of the transaction, and be able to, again, on the acquisition side, basically be able to acquire it at a much lower cost of funds than you traditionally would be able to. Then you also, like I mentioned, able to utilize technology and remodel, and you're able to 2-3x the value, right? So they talk about in real estate that you are basically making your money on the buy of the asset. And so as long as you're buying the asset based on being able to multiply, increase your revenue and decrease your expenses, you're able to 2 to 3x your value in a 3 to 5 year window. And so strategically, that's kind of the focus. And so our target, we're kind of looking in that 2 to 15 million purchase price range. There's a lot less competition. These are too large for smaller investors or individual investors to go after these assets. And these are too small for large hedge fund investors. They're typically looking at the much larger hotel brands or even independent brands that are 200 plus rooms, 300 plus rooms, and they're in the 40, 50, 60 million purchase range. So there's a lot of opportunity in this size of hotel, as well as, like we've talked about, there's about 30% of the hotels under that price point that are owned by baby boomers. And so it's kind of a double increase opportunity for us to make improvements to those properties, increase the revenue, focus on hospitality, and be able to drive the revenue being increased, and at the same time, kind of go in and decrease a lot of expenses. A lot of these older properties, the family is living on site and kind of self-managing. And so those rooms or those units that they're staying in can then be converted into revenue generating and basically adding more to your revenue. And then that basically allows for a better net operating income. So your valuation's based on that net operating income. And so to the extent that you're able to increase the revenues, decrease expenses, you're able to directly manipulate the valuation of that property and be able to sell it at a much higher price once you've done those improvements and you've shown the track record of that increased revenue.
Okay, Rich, a couple questions just popped in. It says, what factors are you looking at or considering when selecting a location for a boutique hotel? And also, in that scenario, do you invest nationwide for boutique hotels, or you're just still local to Atlanta or Florida?
Yeah, so the first part of that question is I'm typically looking for areas that are near national parks, near lakes, or near beaches, right? So something that's not necessarily directly in those areas, but I'm looking at mountainous areas, the whole, whether it's the southeast of Georgia, the Carolinas, and Tennessee. And then we're also looking at certain markets in South Georgia and Florida, or along the East Coast, and that are kind of close proximity to those areas. For right now, we are focused on the Southeast market. We are looking at a few opportunities. We do have partners that we're working with that have projects in Texas and in Asheville, North Carolina, and actually an undeveloped island in Jekyll Island that's going to be a boutique hotel as well. So for right now, we are focused on the Southeast for the moment.
Okay, because a question just came in. Are you looking at any in Charleston, South Carolina? So that would fall within that range.
Yes, that would fall within that range.
Thank you.
Yep. So these are a few case studies on a larger group that we're actually partnering with to help us with the management. So even though we've got hospitality experience on these acquisitions and including with the due diligence, we're partnering with a larger firm that's already got 15, 20 years experience doing this. And so this is a couple of case studies from that group that demonstrates, this is a 30-room Motor Large that they converted into a boutique hotel. They purchased it at $3.25 million, did a $1.7 million renovation, and then the valuation today is around $10 million. And so that's definitely 2.5 times multiple. This is another example, a 95-room hotel in Massachusetts. It was purchased for $5.3 million. They were able to increase the top line revenue from 1 to 2 million, and then also did a renovation of about 4.8, and basically was able to grow their RevPAR growth and their EBITDA by these huge multiples here. Third example. Okay. Yep.
No, I was gonna, a question came in terms of how are your deals typically structured with, from a GP LP standpoint, and also there's a minimum amount to invest.
Yeah, we typically have LP opportunities with a minimum of 50,000 for most of our deals. Some of them might be around 100, but right now we do have several opportunities that are at 50, and the one that I'm going to talk about as well is at a purchase price of about 69,000, and you actually are able to buy the individual unit as well as an option. So those are typically the structures that we look at.
Thank you.
Mm-hmm. So this is just a third example. This is a smaller deal, 17-room hotel in Newport, Rhode Island, and it went 1.1 million purchase, 1.2 renovation, and it sold at around 5.6 million. And so again, it just kind of amplifies, we're not limited on being appraised at what other properties are selling for. It's strictly based on the revenue that you're able to increase and generate on that asset. So let me jump into a couple of opportunities that we're currently looking at. This is actually in the North Georgia mountains. This is a property that is not necessarily a standalone building. There are multiple cabins and multiple kind of multi-unit room buildings that are kind of more in a lodge setting. So there's about 100 acres here with 104 rooms. It already has a swimming pool. It's got horseback riding. Carriage riding is an option. It's kind of a spread out property, but it's an opportunity that we're looking at that basically has been in the family for 40 years. And it's been, the father had passed away a few years ago, so it's a son and a daughter that are currently running it, and they are ready to kind of get out. And so we're currently looking at taking this. They've got wedding venue space. They've got a restaurant there as well. And so this is an opportunity that I think we're looking at, that we will have investment opportunities available to get in and dig into more details on the financials. But this is kind of in the mountainous areas, North Georgia mountains. It's about within an hour and a half to 2 hour drive from Atlanta. It's got a consistent, probably 70% direct bookings over the last 20, 30 years. And so we look to kind of make some enhancements and improvements to that property that will allow us to kind of do exactly what I just talked about with increasing, making sure we do some upgrades, focusing on there's a lot of land here. So we're also going to be adding some additional units and unique cabins to kind of focus in on some of that uniqueness that we can put in place to make it a unique experience. This second opportunity that I'm going to cover is a group that I'm partnering with that's branding, independent branding for kind of 3-star hotels. So these are not necessarily boutique luxury hotels, but they are kind of redefining the, what I would call kind of a Motel 6 experience. And they're basically buying these motels distressed, usually 100 rooms or less, and kind of revamping, making them more modern, and doing all the things I've just talked about, automating, remodeling, and kind of increasing revenue. So the typical property, they've done 8 or 9 projects of this already, and this is an example of kind of before the renovation. So as you can tell, typical kind of Motel 6 with outdoor corridor rooms. They'll come in and basically revamp it and make it a little bit more modernized and clean. Let's see, this is another example here, before and after. Another one here, before and after. So obviously making some simple upgrades, landscaping, to basically create an experience for, and these are typically travelers obviously that are up and down the 95 corridor. There's properties, they've done this in South Georgia, Savannah, in between Savannah and Jacksonville, that whole quadrant, where there's a lot of traffic that comes through there. They also offer full management. So when you invest in one of these units, they will manage the whole process. Unlike some of the other investment strategies, this one is pretty unique because it allows you to invest in the individual units. Each unit is being pre-sold at $69,000, and so essentially you're able to buy one unit or multiple units and be able to experience kind of a revenue share on the performance of the entire property. And so they've got a consistent track record of doing this. There's a new project they're currently working on in Kingsland, Georgia, which is just north of Jacksonville, that has basically this exact same copy and paste model. Have all these services and amenities that are provided. This is one of their locations in Savannah, as an example, kind of revamping, modernizing the lobby experience, the dining area, and having a very consistent theme across each of the rooms and upgrading. This is another one in the Savannah, kind of the before and after, right? So it's the same Motel 6 and creating that independent brand. Before and after on the front desk, before and after on the rooms. And so the other unique thing about this is when you invest in these properties, you basically are going to get your return, usually anywhere from 8 to 12%, but you would have the resale value and appreciation to sell that. They're basically doing it as a hotel condo conversion. And so now you have that when you exit, you're not limited to what's the timeline on the fund. You can basically sell that property at any time in the future if you wanted to liquidate and be able to, get appreciation on that unit as well.
Okay, and if I can just interject, yes, your IRA can obviously participate in a deal structure like this. Just be mindful again, if your IRA owns a unit, you're not allowed to, per the IRS rules, prohibited transaction. If it's vacant, you're not allowed to stay in that property, you or any other disqualified person. So it has to be for investment purposes only.
Like I
So you
said,
can go ahead.
Yeah, they're being very consistent with modernizing, and we're actually going to be looking at some opportunities closer into the Atlanta metro area as well. But this is the property that they currently have under construction, and so this is in Kingsland, and is going to be, I think it's about 120 units, and it'll eventually within about 4 to 5 months will be rehabbed and kind of look similar to the same consistent theme. So any other questions on this opportunity in particular?
Yeah, question. I think you mentioned in terms of the exit strategy. Wait, hold on. It says, does the one own the property wholly or prorated interest?
Yeah, so in this particular investment, you get title to that individual unit and the deed. But
Yeah,
because but because this one is still in process, the way that they currently have it positioned is you would invest in a subscription agreement that you would then convert into a deed once the construction has been finalized.
Okay, next question is, how do we learn more about how to invest? So how do listeners get in contact with you if they want to learn more about the opportunities?
Yeah, absolutely. So I've got, let's see here. So I've got a QR code here, basically is a link to schedule an introduction call. So I can learn a little bit more about what you're trying to accomplish strategically and see how some of our investments might be a good fit for you. And like I mentioned, we do a lot of different things from a consulting standpoint. So even if you have properties that you have separately that you are trying to self-manage, for example, for short-term rentals, it's another thing we can talk about. But if you were able to scan this QR code, it should take you to my Calendly link, and you can book a call, and we'll have a quick 15-minute call to touch base. I am going to be doing another podcast specific to the one-way opportunity with those individual hotel condo units. And so if you'd like to get information on that, you can text me at this number here on the screen as well. And just text me your email address and your name, and whether you're interested in the hotel condos or perhaps the North Georgia opportunity, we can definitely put you on to get you involved in the upcoming webinars we have on those two different opportunities. This is also the QR code here for my contact info, if you would like to scan that as well.
Also, and I'll get a copy of the presentation to where I'll be able to email it out to you. So if you want a copy, you can, you're welcome to reach out to me, and I can forward that to you. Another question that came in is, who's responsible for the maintenance, utilities, and management? So again, if you're using a self-directed IRA, you can't do any of the maintenance. You do have to hire it out to a third party. But Rich, if you can interject and just talk about your company from a management perspective.
Yeah, so each investment opportunity is going to definitely be managed a little bit differently. Even though like I mentioned before, even though Diamond Edge Properties has direct experience with vacation rental management, it is in multifamily buildings and single family. The hotel management is definitely a slightly different model. And what we're going to do in all of our investments is partner and align ourselves with the best management company that might be suited for that opportunity. And so in the example of the North Georgia Mountains opportunity, there's multiple management companies that we're currently exploring that would actually handle all the day-to-day operations, oversight of the restaurant, the spa, all of the amenities and staffing. And so that'll be typically going to be outsourced so that we can focus on the oversight of the overall investment for our investors. And then in the case of our one-way partnership, they have a team called 360 Management that handles the management of the property as a hotel, and the monthly statements that go out for the revenue share, and basically everything involved with hiring and firing of operations, cleaners, maintenance, and so on. So all of that is typically going to be handled as a part of the investment as an expense item.
Okay, final question. It says, I'm late to the game this morning. How do I get to see the earlier part of the presentation? This is recorded. It will be uploaded onto our YouTube channel later today. You'll also automatically get an email from us later today or tomorrow in terms of a copy of the presentation, so you will have access to it. You can always go to our YouTube channel as well to watch previous recordings. And with that, Rich, again, great presentation, great content. Any parting words before we close out? I know we're just a few minutes after the hour.
Yeah, no, thanks everyone for tuning in, and thanks Reneika for having me. Just as a reminder, feel free to check out my podcast as well. If you search BNB Investing on Spotify or Apple or YouTube, you should be able to come up and check out some of the podcasts we're doing. A lot of times it's with investors, but we're also interviewing other managers and service providers, as well as, like I talked about, economists that talk about the overall market as well. So should be pretty informative for you to check out those podcasts as well.
Thank you. One final question that just popped in relating to Advanta. So we're one of the nation's leading self-directed IRA administrators in the industry. We've been in business for a very long time. Our core focus or sole focus is all things related to qualified retirement accounts. We encourage you, you can do your due diligence, you can reach out, take a look at who we are and what we do. But we're not the only self-directed IRA custodian, but we are one of the absolute best in the industry. And with that, if you have specific questions, you're always welcome to reach out to me. Go to advantaira.com, take a look at our website, kind of probe around, and we're happy to have you as clients. But if you just want to kind of learn more about it, just reach out to us. Again, thank you so much, Rich, for being our featured speaker today. Happy investing, everyone. Have a great rest of your day.